Traders at Axis Bank anticipate stronger market rally due to increased appetite for current bond yields by bondholders. The CBN is also expected to release the result of the last Retail SMIS auction today and rate at the importers and exporters window are poised to remain relatively stable. Kinskin Ukeje, foreign exchange dealer at Axis Bank, joins me for more market updates. Thank you so much for your time on the show today, Kinskin.
Thank you so much for having me.
Now, starting off the conversation with the appetite, the wet appetite investors are having for bond yields at this point in time. That's what's driving this market rally. Take us through what's played out this week from the bond markets to the treasury bills market and what is also likely to play out in terms of the shortest outlook we're looking at.
Okay, so at the bond market, we saw at the beginning of the week the DMO float an auction offering 225 billion across the 29s, 32s and 37s, and we saw that auction oversubscribed to the tune of 344 billion, but the DMO sold only about 269, and most of the subscription for that auction was skewed to the longer end. That's the 15-year reopening. After that auction, we've seen a bullish run in the bond market. We've seen the appetite for especially the 37s sustained across the market, which is currently trading at 15.85 levels after a close of 16.2 at the auction on Monday. Also, we've seen demand for the 49s and for the 50s. However, we've not seen much supply in that space.
And market illiquidity also remains a concern. However, we're also expecting the CBN to release the results of the retail auction of the SMIS today. That's one of the focus we have here ahead of Monday as well to define what will play out. Your take on that?
Yeah, the CBN Retail SMIS auction result will come out in their usual practice as the retail auction was held last week. We expect the result to come out and market participants should, that's the retail bidders, should get the winnings of their results going in today. For the market liquidity, we've seen it sink into a repo of about 129 opening yesterday due to the funding of the bond auction, and the outlook for next week is that in the T-bill segment, early next week we should see a quiet run, but with a more bearish run as market participants continue to fund for their obligations.
And talking about the bearish sentiment as well, do you think in the shortest outlook as well, we'll see the bears losing their grip on the markets anytime soon? We are wrapping up the year gradually.
Yeah, as we're wrapping up the year, you would see market participants want to take close out on their profits and everything, but the outlook is still bullish in the future time.
Okay, and finally now, like some of the highlights to look out for, because investors are really looking for havens at this point in time. Based on previous conversations we've also had, the equities market is losing investors' interest, and that's translating to the pulling we are seeing in terms of the fixed income market. The attractiveness, one more time, do you think that is still well sustained?
I think it will still be sustained going on.